Welcome back to another episode of State of the Market here in North Idaho, December 2022 edition. Before we continue, find that subscribe and that bell icon, click them. That way you get notified of our new episodes coming out every single week. Also, in the description of the video is going to be a link to our digital newsletter. Click that, save it. Great information. It has listings, events, and announcements. The link never changes, but the contents inside the link do. So without further ado, let's get started. My opinion on the market, if you've been watching, has been that the market's it's fine. It's not going to implode. It's not going to be 2008 all over again. And my opinion of that still stands today. We're going to go over some graphs from the MLS, and then I'm going to tell you what I'm seeing with my own eyes, and we're going to put that together, and I'm going to explain to you why I think the market's fine. It's correcting, it is normal, and it is needed. The market's not going to just bottom out and be like, scary, okay? So we have a lot of information to go over. Let's get started. Again, we are in the MLS. This is the Coeur d'Alene MLS. It covers from Coeur d'Alene all the way up to Canada. It has the most members, the most data. So this is the most accurate information that I can provide you. This graph is a 5-year graph of the average, let's switch to average, sell price in the MLS. And what we see in 2017, 18, and 19, a pretty healthy growth, pretty normal growth. We get to 2020 and we see this nice spike, thank you COVID, and it continues to climb up into 21 where we see another spike, not as dramatic, but it's there. And then we see in 2022 another spike, and then it comes back down and it starts to level out again. So what I find really interesting about this graph is the last 16 months, it looks like maybe we plateaued. I want to see more data before I officially call that. But here in the peak, June of 2022, we're at 735. We came down to 760 and we've climbed back up to almost $700,000. So it's going to be really interesting over the next few months to kind of see what's happening with our average sell price. The reason why I think we're going to continue to grow and grow at 3.5 to 4.5% in 2023 is going to be on the next graph that I show you. And let's go over there right now. And this is the homes for sale. Now, go ahead and look at this graph and tell me what you think, what you see. If you see that the inventory is getting less and less over the last 5 years, you're correct. Now, we do have this outlier in 2022, and we'll see if this is going to be the start of a new trend, or if this is just one of those points on a graph where, you know, as you go down, you might have an up and then you keep going down, or vice versa. You're going up, you come down a little bit, and you get. So that could be this. I don't know. We need more data. We need 2023 to be on here. But let me tell you why I think this could be an anomaly. Inventory is still going to be hurting. I think we're still in a downward trend because how many people have just an amazing interest rate where it's basically free money? A lot. Another reason, new construction has never recovered from the 2008 meltdown. It hasn't picked up. I don't think it's going to pick up. We do have a couple cool new communities, and we're going to talk about that at the end of the video, but overall construction hasn't picked up. Another reason why inventory is going to hurt to come back to help bring the prices down, 41% of all houses in America are owned outright, meaning it doesn't have a mortgage. You know how many homes in the Sandpoint, Coeur d'Alene area that are second homes, third homes, and investment property? A lot. They are owned outright. So because of those three reasons, I don't think we're going to see a big spike of inventory. And that's a really good sign to see if the market's going to really tank or how quickly a market's going to tank. And I don't see the inventory moving quickly, because if you look at how many houses that are on the market and how many are getting sold, it's not one-to-one. We show a lot of houses on the market because they're not selling right now, because that big artificial demand for houses, it's gone. Now we have people that need to finance that. It's more of a want to move than a need to move. And because of those reasons, we just have more options on the market. So let's go back to the MLS and let's look at month supply. Anything between 3 and 6 months is a neutral market. Anything below 3 months is going to be a seller's market. Anything above 6 months is going to be a buyer's market. So what do we see here on this 5-year graph? We see a trend for 3 years going down from a neutral market into a seller's market. Duh, we all knew that. And then what happened in 2022? We came out of an extreme seller's market into a neutral market. You thought I was going to say a buyer's market. Bonner County was slightly in a buyer's market for 1 month, and the supply was 6.1 months. Boundary County went all the way up to 8 months of supply, but they bottomed out from October to November back into a neutral market. But overall, look at this. We topped out at 4.1, and we're headed back down to a seller's market. Now, I think that's only happening because of the time of year that we're in. Listen, we are in holiday season. We just had pumpkin pie, turkey at Thanksgiving. We just had a snowstorm where I was plowing for a couple days. We're getting ready for Christmas and presents. There's New Year's and the bubbly. So yeah, historically, real estate gets slow in the wintertime, but in snow country, it gets even slower. So I do expect our market to go officially into a seller's market, but only by numbers and only because of the market time that we're going into. I fully expect in Q2 that we're going to get back into a neutral market. I don't think we're going to get in a buyer's market. We might peak, we might flirt with it, but I don't think we're going to get there, again, because of the inventory. We're not going to see a rash of inventory. If we do see more houses on the market, it's because they're just not selling and the interest rates didn't drop down to 5% like I think they're going to. So there's nothing else in the MLS that I really want to show you. So if you're a buyer, why should you buy right now before Q2 of 2023? Well, if you're willing, you're able, and your house is on the market, then go ahead and buy. Because it's my belief, Q2 of 2023, we are going to see a little frenzy of buying because interest rates, they should be back down into the 5% range. Buyers that are on the fence and they're just driven by interest rate, well, 5% is going to be the new sexy 3%. That's where the interest rates are going to be. That's where people are going to be comfortable with. That's my belief again. And I think that's going to happen in Q2. And what else happens in Q2? That's the natural takeoff of the real estate market. We looked at the graphs. Every spring, the market takes off. So those three things are all going to happen in Q2, and I think we're going to have a little bit of a frenzy. That's why I say if you're willing, able, and your house comes on the market, go ahead and buy it because you're going to have more competition come Q2. Now, sellers, I know you're panicking a little bit right now because the days on market, they've gone up. You're not getting the foot traffic that you're used to or used to hearing during the COVID days. Do not panic. Wait out the winter. It's going to be a dark winter. There's not going to be a lot of movement. But in Q2, the buyers are going to come off the fence and you're going to have more foot traffic. So just be patient. That's all I'm saying. Okay, so let's wrap this up talking about a new construction project community that's happening in Sandpoint. It's right on Boyer. You can see Schweitzer Mountain. Very, very nice. I toured 4 of the models. I think they're just about wrapped up. Once they're wrapped up, I'm getting my videographer out there and we're going to shoot a really cool commercial and I'll send that out to everybody. But there is, 49 homes in this new development. 4 houses are being built with an ADU. And the houses are, about 2,000 to 2,400 square feet. They're beautiful. The layouts are really nice. That's what I really took away was just the layouts, how nice the layouts were. So I really appreciate you guys taking the time watching this video. Don't be scared. The market is healthy. It is correcting and we're all going to be fine. Let's just wait to Q2 and get those nice interest rates back down to 5, make it more affordable. Take care and we'll talk to you soon.